All right, I'm gonna give it like 2 more minutes. It's 7:40 now, so I'm gonna start at like 7:43, 7:44, 7:45, something like that. And we gonna go until like 8:30, 8:45. I say 8:30 on the flyer, so I'll leave like the last 15 minutes for any questions that anybody might have. Anybody that's in the YouTube stream, the TikTok stream, feel free to share that with anybody you think could use the information. All right. So while we waiting, for those that don't know, I go by Stacks. I've been trading for like 16 years. Probably really started getting it together like in the last 6 years, where I could say that I've actually started becoming profitable and maintaining the profit. I still have my own personal struggles where I may overtrade it sometimes. I may just be, I might be on a streak at times that might throw me off mentally, you know what I'm saying? Because if you're just always winning, and I'm not saying that I always win, but if you're just winning a lot, you tend to just disregard everything else. Like you feel like you can't lose, and then you end up losing, and those losses are the losses that are like huge, right? So it's okay to take losses in the market. Those are lessons that will help you kind of bring you back down to earth, right? No trader is 100%, but your goal is to have like more wins than losses. All right. Today I want y'all to take on trading with like a whole new perspective. You're gonna have a plan, you're gonna have confidence, and you're gonna learn how to manage your trades. Trading is, I like to just say, it's full of noise, right? And noise is everything. Noise is the news, noise is Twitter, noise is any type of Facebook, social media, TikTok, all of that stuff where it's just people bombarding you with this is the way to do it, that's the way to do it. Take my class, take this, take that. I figured today I get this away for free, and whoever finds value in it, if you learn from it and able to retain the information, share it with somebody else. If you need extra help on the information and you want a mentorship or you want a class, then reach out. I don't have no problem helping out. In the market, timing and proper execution are the keys to get into that financially free table. if you want to sit at that table, you have to understand timing and proper execution. You don't time the market though. You play with time. So then the next thing you have to be concerned with is proper execution. Now, before you start trading, you might want to ask yourself some questions. And those questions will help you define like what type of trader you are and what type of trader you need to be successful. Everybody doesn't need to be a day trader. Everybody doesn't need to be a swing trader. Everybody doesn't need to be into long-term investments. There's a place for everybody. Not everybody needs to trade stocks. Some people might want to trade futures and they do better at it. Some people may trade Forex and are better at it. Other people might want to trade crypto or commodities, and that's where they find their niche at. So you have to find out what really helps you out in the market and makes this all work for you. Before you get started, you want to ask yourself, why are you trading? Everybody wants money. Nobody's purpose is just money. What do you need money for? Or, like I said, it's not always about money. Some people, when we talk about being wealthy, wealth doesn't necessarily have to have a dollar value on it, right? Wealth can be just your physical health. Wealth could be somebody just wanting to travel and experience different things. Wealth could be your family, right? Some people might equate wealth to money and cars and big houses and all that other stuff, right? So you have to determine what your wealth is, and then you have to determine your wants versus your needs. All right. So why are you trading? Some things that are like for those whys, it could be you want to relieve like some financial stress. With the way that we have to work until 65, 70 and so forth, you might want to set aside money for retirement. You might want to make money so that you can go on more vacations. Somebody else might need money to support college or buy a house or a car or medical expenses. It could be any of that stuff. Is your whys. You got to figure out why you're trading. There's a lot of people that have no why to why they're trading. They just are trading because they saw this on social media and they see people making money, and the first thing they run to is, I'm trying to make that money too. The same thing happened with like drop shipping and stuff like that, right? Online sales and stuff. There was like a huge influx to it, but then a lot of people backed out of it because they had work to it. So you have to know why you're doing this and what you want and the reasons. Like, what do you want out of it? So the difference between like your wants and your needs. Everybody wants $1 million. Some people want to own cruise ships and want to own 10 luxury vehicles or own box seats next to the owners on the team. Those are wants. But then you got to separate those into needs. And it's, you need an extra $500 for car payments. You need an extra $4,000 to take a trip in 6 months. You need $300 to cover stuff for the kids. You need an extra $150 to get to the concert that you want to see. You need money to buy a computer. You need X amount of money to pay off a course. So you always want to know the difference between your wants and your needs. And you need to focus on what's necessary. Because when you focus on just what you want, you're going to overtrade. You're going to hold trades longer than you should hold them and not take the money. It's nothing like being in a trade that's up 1,000% or 500%. And I know this very well. And then watch it run all the way back down to 100% or 95%. Because in your head, you're saying, oh, this trade is going to go just a little bit further. And it just don't move. Right? You're going to lose money in the market. Losing money is tuition. It's nothing wrong with paying tuition. You go to school, you pay tuition. You don't have no problem paying it there. You shouldn't have no problem paying it here. Most people's initial entry into the stock market is a good thing. I don't know why it happens like that, but most people enter the stock market and start making money. And then some point in that you making money, it just all goes south. And that's when the frustration starts. That's when you start really seeing that trading gets emotional. And that's where you start to learn you got to separate your opinions and separate your emotions from trading. I was trading for pretty long now. I was trading before 0 DTEs. So that's a pretty long time that I've been messing around with this. All of those would have to be gimmicks in my eyes to get people to trade more and lose more money. You want to stick to what you know and forget about everything else. The same thing with taking profits. If your goal is to make 20% on a trade, and then you see that trade run up 1,000%, the 980% that you missed out on don't got nothing to do with you. And it shouldn't be none of your concern. Because once you start concerning yourself with that, you're going to start chasing trades. You're going to start being even more emotional. Oh, I forgot. Oh, I missed that trade. Oh, I did. You don't want to do that. Because that attachment is going to stay with you. So, how I got started was trading crypto. And I did pretty decent with crypto. Made some good money in crypto. And then I went from crypto to Forex, and Forex into the futures, and futures into the stock market. if you want to be good at anything, they say that you got to put in like 10,000 hours, right? 10,000 hours, quote unquote, makes you a professional, right? I think 10,000 hours gives you an idea, right? But the learning process is forever ongoing, right? So just like there's like boundaries in life, like you got yellow lines on the road to separate traffic. You got like out of bounds on football fields or game fields. You got to set those same type of boundaries in your life when it comes to making money and how much you're going to spend per week and all of that. So you need to come up with like a trading Bible, and those are things that you're going to live by, and rules that you won't break for anybody, right? You have to have a strategy. You got to have risk tolerance, and you got to have a mindset. All of those things right there is what builds great traders. Then you build rules around that. So you want to find out what kind of trader you're even able to be before you start trading. Right? Do you work from home? Do you work in an office? Are you on the road all day? Are you at a computer often? How much time can you look at the market? Right? These are questions that build to see what type of trader you are. You got fundamental traders. They focus on like company growth, value amongst the competition, debt income ratios, dividends, right? Long-term trading. Do you want to be a swing trader? These trades are usually held for like 1 to 5 days. You don't have to be on the platform all day, but you need to know what's going on. So there's less screen time involved in that. Then you got day traders. You got to have plenty of time to be a day trader. You got to be able to see the screen, see what's going on all day. You want to exit your trades by the end of the day. Your decisions aren't based on news or anything else. They're just based off of technical analysis and volume and momentum. Then you got longer term trades and being like a position trader. These are trades that you're going to be holding for weeks and weeks and weeks. You don't have to look at the market daily to be a position trader. You see the setup on the long term, you take the trade. You got to make your trading style work for you. If you got responsibilities and things to attend to, then day trading isn't for you. If you're concerned with the longevity of a company, then you might want long-term positions, and fundamental trading might be a thing. If you want to be in and out, day trading and swing trading might be a thing. Just know whatever you pick, you should really focus on that. Right? Alright, so let's talk about like execution. Execution is like the path to your reward. Right? You can start with $100, and proper execution could take you to $1,000 in a day. In one day. Today there was trades that went from $200 to $2,000 by the end of the day. Not even by the end of the day, at the end of the day. So there you can capitalize on your money, but you got to be focused to take proper entries and have that proper execution. Um, know that you're your own boss. Nobody's going to manage these trades for you, right? So don't overbear yourself with being in a thousand trades at one time. You're not managing a warehouse, right? You're managing yourself, and to manage a bunch of trades at one time, you're gonna really be trying to kill yourself out here, right? So we don't want to do that. All right, now let's get into these charts real quick and talk about a few different things we got going on. So when we're looking at a chart, right? Let's break these charts down. I think I could clear this off for a second. Let me see how many drawings are on here. Yeah, I can clear this off real quick. All right. So this right here is the SPY, and just looking at this, right? Let's start with the most basic information first. I'm gonna change the colors of this because most people know this to be this color. I recommend changing the color of your candlesticks. The market is part psychological, and you want to have no bias when trading. Just because there's a red candle doesn't mean there's a sell. Just because there's a green candle doesn't mean there's a buy. All right. So when we're looking at this in the simplest form, we have basically a red candle and a green candle. Green candles mean that the price is going up. Red candles mean the price is coming down. We have wicks at the extremes of these candles. This wick right here shows buying pressure. This wick right here shows selling pressure. Opposite on a red candle. This wick shows, well, this is the same thing. I'm sorry. This is buying pressure. No, I'm sorry. This is buying pressure pushing up. It's selling pressure pushing down. Difference between these two candlesticks is the open and the close. Green candles open at the bottom of the body and push up. Red candles open at the top of the body and push down. All right. Each candle tells a story. So a lot of people will like to say, oh, I gotta wait until the market opens to see what I'm doing. Right? But if all of these candles are telling you a story, then there's a huge book to read right here, more or less. And when you're reading the story, sometimes you understand how to anticipate what's next, just because you've been reading it for a while and you understand the characters. So then you're gonna start saying, okay, this should do this because it's doing that, or this should do that because it's doing this, right? Me personally, I'm a big chart pattern and bar combination trader. I believe everything is on the chart. Before the news is stated, before data is dropped, everything is on the chart, in my opinion. So when I look through a chart, I'm looking for certain patterns and certain sequences to be fulfilled before I take a trade or before I exit a trade. Right? Let's take these off real quick. These are just alerts. Try to clear off the whole chart real quick. Alright. So let me see if I can pull up some different like chart patterns real quick for y'all. So I can just show y'all what you're gonna look for. Some of the things you'll look for when you're looking for these trades. And all of this information is in my Discord. So this right here is like a candle pattern cheat sheet. And when we're looking at this, you see like bullish candle patterns and bearish candle patterns. Here's what I was explaining earlier with the open, close, the body of the candles. The open is up top on a red candle, opens at the bottom on a green candle, and pushes up, pushes down on that. These are the high and the low of the day. The wicks are the high and the low of the day. What else do we know about wicks? Wicks are where liquidity resides. All right. These candlesticks in the middle. Well, I don't want to say all of them. These right here are like pattern starters, I would say. We like the hammer, right? Hammers say that price should push up higher, right? Here's a hammer right here in the corner, right? We like inverted hammers. Inverted hammers are some of my favorite bars to trade. They say that, let's see. Here's an inverted hammer right here coming on a downtrend. It says that price wants to retrace this hammer. So you see this, then you should automatically know price is going to try to go up for some point of the day. Whether it reverses, it doesn't make it, it's going to try to go up. It's up to you to pull that profit before it reverses. We like the hanging man, right? This is the hanging man, right? It says that price is going to start pulling back. These are all given on the chart before you hear any news. You should be making money every time you see certain things on a chart. Now, when you're looking at a chart also, it's not that you have to follow every single pattern or play that comes out, right? You don't have to take every single trade in the market. It's basically what I'm saying. Moving along, we got the shooter right here. Let's see if we can find the shooter on here real quick. No, they're gonna give me one. Oh, here's I don't like that one. That is a shooter, but I ain't really like that one. But here's a shooter right here. Right here. This is a shooter. Right? So it was up here, shot down, boom, and it keeps going. Right? Let's check out some more of these real quick. We got bullish haramis, right? We got piercing lines. We got tweezer bottoms. We got tweezer tops, dark cloud cover. We got a bearish harami, bearish engulfing candles. We got three crows. This is like just red candles after red candle. Got three crows. You got a evening stars. You got abandoned babies. We got the bullish abandoned baby. We got the morning star. We got the three white soldiers. We got a three-line strike. So basically, a three-line strike comes from three black crows that finishes, and then you get the bullish candle that shoots up. Three outside up, three inside up, and then we got morning star doji. So these are just some of the patterns that we would look at when trying to make certain trades in the market, or if you're looking to trade any of those patterns. When you're looking at these things in the market isn't necessarily going to look like that paperwork that I just showed you. That paperwork is basically showing like the theory on how it should work, but it's not the practical. All right. One second. Let's find something. I want to find another thing. So here's these pin bars. So this is like how you can see like the market is losing power or it's gaining power. Right? Full candle says that sellers are in control. As you start seeing these wicks start popping up on candles, this is showing you that things are getting weaker, and that I don't really like the whole buyers and sellers thing, but for this we can say buyers and sellers. The reason why I don't like the whole buyers and sellers thing is because the market is, in my mind, and you'll hear this from other people as well, the market is an algorithm. So I don't really think there's anybody buying and selling. I think that this is all a computer program, and if you understand how to read it, you understand how to make the money off it. So this is like losing momentum on the selling side. This is the same thing on the buying side. All right. So you got buyers are in control. As the wicks start building, we're still in control. We're still in control. Still in control. Now this is when you start worrying. Right? This is where you start worrying at. Probably like around number 4 is where you start looking to find your exit. Right? Before it reverses. You don't have to get every cent out of the play. Take what's for you and get out of the play. We can look at this real quick, and we'll do some examples of these too, so that you can see how this all works out. This right here is supply and demand, and when you're looking at supply and demand, right, we're not talking about like horizontal lines, right? We're talking about supply zones and demand zones. These are where technically, whatever they want to call buying and selling, this is where the most buys take place or the most sales take place. So buys take place in the demand, sales take place in the supply. Most times, supply zones, you can tell the supply and demand zone by a lot of consolidation, right? Or you can tell it by just a wick. These wicks are supplies and demand zones as well. All right, we'll go over a couple of these examples so that you can see how this actually works in real time. Another thing that we talk about very much most of the time when we're walking through a chart is we're going to have fair value gaps. So we're going to talk about fair value gaps, right? It's a 3 candle pattern. The first wick and the second wick cannot touch each other. This is the lowest probability one. This is the highest probability one. This one is a higher probability. This one's a higher probability. So we'll look at a few examples of these as well to see which ones work out more than the other ones do. But it's always a 3 candle pattern. The first wick, the next body candle, and the third candle, the bottom wick. The first wick and the third wick cannot intersect each other. So you can't have this wick all the way up here, then this isn't fair value. Fair value is only when you have the 3 candles and the first wick and the bottom of the third wick don't intersect. All right, so let's kind of just look at some examples real quick, and then we'll come back to, we might go over like the orb or something, another little strategy people can use. So just in this section right here, right? This right here, that's a demand zone, right? I mean a supply zone. I'm sorry. This is the supply zone, right? The first time we interact with this supply zone, you can see we reject it and ended up coming back down here. Then we kept going up and up and end up here. Now, there's a few ways to look at this, like just this section right here all the time. Me, I'm a person that plays from the top down. I'm always looking at top down analysis. So I want to read the market from the top to the bottom, right? For right now, we're just going to use the daily chart, but we'll get into reading from the top to the bottom. This candle right here, right? And this candle right here. This is the setup. This is the signal. We're going to pull up what that is right here. I guess we could use this one. Let's see if it's on here. There it is right there. All right. So this setup right here is this right here. This was a bullish harami, right? What happens in this, it's normally like a 7-day type of move. This went more than 7 days, but it's usually like a 7-day move. But the move is just usually 2 to 3 times the size of this move. So let's take a price range, and we'll take this size right here. All right. So we got 2.84 is the percentage that it was going to move, right? So we would take 2.84 and start by multiplying that by 2. You get 5.68. So then we can stretch this down to 5.68. I'm going to just open this up a little more, just so we can see where this actually stops at in the market. So that would go on the top of this. This is the breakout candle. And this would kind of say that this should be going to 703 or something like that. Me personally, I don't think that the upside is 100% done, but it could be. But this would be how you measure to the target out of this Harami. It should want to get up there. Let's break this into 50%. We'll talk about breaking sections into 50% so you can see what happened and what didn't happen. That's put this on regular range. This was 50% of that range, 683. All right. If this holds this range, I would only expect this to start pushing back up to the upside. If it's not going to hold the range, if it get below this candle here, then I expect it to go down. When I'm looking at a bigger picture, I'm always trying to anticipate, well, what could possibly be. So from here, the first thing that I would have thought I saw, and this is all part of learning chart patterns, I would have thought I saw this head and shoulders. Right there. That ended up not working out, right? Because it never came down here. Let me put the 24 on and see. It did come down there, right? On a 24-hour chart, it came down there. So this is like all the moves from beginning of the day to end of the day. So it did come down here. Now, after it made this move right here, it ended up shooting up here, going to the upside, right? And we take this and do like breakout measurements, right? So if I did this, right, this is how you measure the right shoulder on Head and Shoulders. If I did that and measured that right shoulder, right, then I took it and I put it on top of this right shoulder, right, you kind of see that this is like where price more or less reached before turning around. Right, everything is like a mathematical kind of equation that if you're on the right side of it, it works out. So we ended up having this move up here in the market. Now, if you don't know how to do measurements or anything like that, then you probably would just be saying, all right, I'm gonna use a fib or something to figure out where we was going next. But a lot of people at this point thought the market was still going down. We always in the market go back to where we came from. So a couple weeks ago we had this big drop in the market right there, right? We had the big drop in the market right here. And I'll take this horizontal line, and I gotta change the color of it, right? I'll take that horizontal line and I put it right there. This is where the market originally broke down at. It dropped right there. Then you see, eventually, this is where it came back to. Before, it didn't break right over it. It came back to this. How could we tell that it was going to go up and not reject this and go down? The reason why we could see that it wasn't going to go down is because if this was the top that we were coming to meet, there was 2 times right here that there's a little piece there, but here's the more prominent one right here, right? This shows weakness to the upside. We can't get through this level right here if it's strong. If it's strong, we shouldn't even push a wick through it. But because it was weak, the wick goes through it, and every time this happens over and over again. If this is the market structure, or the change of character, or whatever, however you want to look at it, when it breaks it, it always pulls back. How far it pulls back, I can't give you the exact number on that, but it always pulls back. So because it pulls back, you should automatically know that we broke this. 9 times out of 10, we should start running back up. And this is exactly what happened. Boom. It takes off and it runs up. Now, how do we get back down here? Right? Again, the market is full of patterns, and you have to figure out how to spot these patterns. There's plenty of books out here on these patterns. Utilize them. So right here, somebody would have saw this and said, okay, this is a diamond pattern, right? It is a diamond pattern, but somebody might have saw that as a diamond pattern. Somebody else might have said, outside of the box, when you're looking at it, it could probably be like a head and shoulders, right? You got like shoulders here, you got the top of here being the head, you got another shoulder here, and then it starts breaking down. Either answer would be correct when you're trying to figure out where it's going to go from wherever, right? So for right now, we'll just say it's this. And let's see if I can draw it. I don't like how it's coming out. That's why I'm a little hesitant to draw it. But this is fine, right? This works. Pull that over there, right? So this is like the extension of the diamond, right? How diamond patterns work. Diamonds want to, from where they come from, and then they want to leave and go back to where they came from, right? This obviously went down lower. This went all the way to here. Why would it go all the way to there? Because it's probably reading that it came from here, right? There's still more room to the downside here to say that it came from somewhere else. It has more room down there to go because that's where it came from. But this right here met up with that body, right? And the body of the candle means more than the wick on the candle, because we could take these wicks off with a click, right? Double click on here, take these wicks off, and that never happened, right? If I take this and I put this at the bottom here, technically, this is where it came from. It came from here. Technically, it never got back up here yet because we're talking about bodies of the candles. All right, put these back on though. Now we see if we came from here and then we started breaking down from here and then drop. Well, if this is where we exited at, I take this line here, I put it right there to the bottom. Well, that would be wrong, so let's not say that, because I may just have this drawn a little off. It may just have to fix this a little bit. So basically, this is supposed to line up with this retesting that, and it might be off a little bit. Like I said, it might be something like this because this is the edge of the candle, right? So this is where the candle actually broke out from, right? That's where we broke the diamond at. Because this is where we broke the diamond at, you see we bounced up here and we retested that, and then after it dropped back down. Why did it drop down? It dropped to finish this move, right? We finished that move. What's the next possibility? The next possibility is that price should want to retrace a little bit to the upside, and after it does that, then we want to look for the pullback. When you're looking at the market, right, I just showed you a diamond pattern. You don't have to know the diamond pattern. Somebody else might know a double bottom. Somebody might know a double top. Somebody might know stick sandwiches and just other aspects of the market. You do not have to know everything. All you have to know is what you need to use. So if you need to use a double bottom happens basically every day in the market. A head and shoulders happens every day in the market. Just depends on what time frame you're on. You can use those plays or those patterns to get into a specific play, right? Patterns have locations that they need to be. You cannot just have patterns all over the place. Patterns have to be in a certain position for them to work. If they're not in a certain position, that is a failed pattern. All right? This right here, again, we have money in, money back out. This right here could come across as a bullish stick sandwich, but it could be short-lived. It doesn't have to run all the way up here or anywhere else. It could just be a bounce to halfway of this, right? It could be a bounce that pushes this up and it starts running up to 700. Right now, we're only concerned with the fact that it might bounce. Where it's going, we'll figure that out. All right. Another thing that you could use to help you figure out like how to follow the market is a pitchfork, right? Now, when I draw these pitchforks, I don't like using the tool because the tool is like, I don't know, it's locked into whatever the tool, how the tool pulls. This right here, I get to do whatever I want with this and line it up the way that I want. So we got this down channel right here, right? I like to duplicate these lines when I'm making a pitchfork, and I'll put that right there. So this is my channel right here to the downside on SPY. right? Next thing I want to do is I like to split this into 50%. So I'll take this side and I'll drop this down to the middle, roughly. I change that to like a dotted line or dash line or whatever. And this is my pitchfork, right? You can take this down to a lower time frame now. And then you can start seeing how the market is reacting to these areas. All right, we got this wick out here, and we got some space down here. I'm gonna take this, and I'm gonna take this. I'm holding down Control. If you're on Mac, it's probably the Command key, and I'm grabbing the mouse and just dragging both of these up so that it's symmetrical. I wanted it to stop on top of this wick, so wherever this stop, it's equal now. This right here looked like it hit the bottom of this section here, whereas this hit that top of the wick. And now there's a possibility, right? We see that this is the bounce off the bottom. We got an inverted hammer in here. 9 times out of 10, price is trying to run back up that inverted hammer. So that's 73. If we take this out, right? Because this would be the next day right there. So we will be over here, and to take that out means that we need to cross over the 50% of this pitchfork. So because we got to cross that 50%, that says that there's a possibility that price can continue higher. Where would I expect this price to continue higher to? Would be roughly to there. This is where we came from, right? Price drops from right here and continues down. So that's where I would look as for a target. If I'm looking for like a shorter target, I would take this and come across the bottom like this. I would expect when price gets up to this area, before it hits any of this, it's going to get a rejection, right? Or price runs up here, and let me put another line on there to catch the bottom wick down here. Because you can add this, because when there's price action, the same angle in that price action remains for that, whatever that trajectory is. So if this is going like this, then everything in this area going this way is like a rejection, right? Or some type of pause. So now we got this put together, and we keep doing this to build our story, right? Let's say we do that now, right? Now it looks like we got this big old wedge that's building up, right? We're constantly building the story ahead of time. So now we got this wedge that's built up. We know that this is a possible target, like 77, 78. So let's see something like this happen. Right? Up there, wherever it comes to down there. Let's say it stop there and then get a drop. In the process of doing this, we gotta always anticipate, because now we got possible head and shoulders. Right? So if it jumps up here, right? And whether it does this double top or not, that's still part of the head and shoulders. Right? And then things fall down from here. Very possible. Alright. This drops out. Price may pop back up there. Let me write this again. This can go up here. Start coming down. Boom. Whatever it does drops out. Comes back to retest where it dropped out at, and then continue down lower. Right? All of this could still be inside of this head and shoulders that might want to play out. Right? So every time we're looking at the market, we're always trying to build a story of somewhat of like some type of anticipation on what's to come. All right. Now, just within this picture right here, this is a 2-hour chart. When we come to the 2-hour chart right here, we have fair value. Right? We were talking about fair value. So we come here to the fair value and we open that up. Price is more than likely trying to get back in here to this fair value. Right? So I would take my fib, and my fib is just breaking things down into 50%. So that's the 0, the 50, and the 100. Right? So we got 675 here. I want to expect this to push up and try to get into this fair value gap and at least tap 676. It doesn't have to tap 677 or anything else. I want it to at least tap 676. If it can do that and then reject, I'm a happy guy. Right? But this is how you want to see the market moving. There's no fair value right here. Right? Because there's no fair value right here, you should expect price to continue until fair value is created on a lower time frame. There's fair value right here. Right? Got some fair value right here. You see how price went into the fair value and then it rejected it. From what I recall, it still went up over this throughout before the market closed. But or we could check on that in a second. But that's how you track like fair value. So it just ran into this fair value. We understand that if it's not mitigated to the upside, that we'll get that pullback. All right. So these are things that we want to look for as soon as the market starts moving. Now, a lot of people like day trading, so they come down here on the 1 minute to 5 minute, and they try to do this. It's cool that you like day trading. You know what I'm saying? It's just that might move a little faster than you expect, right? And if it's moving faster than you expect, then it just might not be what you really want to be trading, right? That's why I like to trade higher time frames. It gives you a chance to think, right? It gives you a chance not to have to rush into everything. All right. This is extended time. This is regular time. Let's switch it up a little bit. Let's see what we got right after class. I said right after class. Right after the market close. Huh. Right after the market close, we see that right here. It's making a pin bar into this trend line that we drew earlier. Right. We can straighten this line out with because this is on a different scale. This is on the regular time and not the extended time. So we can straighten that out. And again, we straighten it out. You see that this pinned into this bar. So it ended up breaking the bar, then pushing back up and closing over top of it. That pinned into the bar. So now the next move should be us trying to push a little higher. All right. What's this from? Okay, that's the think time. 1 second. Let me fix this. All right. So we got our like semi plan to the upside on here. This could possibly be a bullish stick sandwich. Like I said, this could possibly push the market up a little bit higher. From what I remember too, Apple was moving up practically all day. So, and in the after hour was kind of sustaining itself. So, some of these things I want to see with some type of continuation to the upside. Talked about like the fair value gas. We could do that some more. Let's go to QQQ. Now, SPY and QQQ are not always going to look alike. But for the most part, whatever they're doing, they're all doing them together. So when you look at the QQQ here, right, something similar to what the SPY was. It didn't come from all the way down here. It probably more or less came from these areas. Let's do like a 2 hour. Not even on the 2 hour, 4 hour. Yeah, maybe like the 4 hour. So I guess they're gonna say it came from the gap, right? So it came from like this area on the gap. Ran up in the hair, ran down part of the way, then it ran back up and then it ran back down, right? Let me draw this in real quick. All right, so we had this as a tap on QQQ. Right here, you can see how many times this kind of rejected this. It was like 3 times that it rejected it. Then because of that third time rejection, we knew that price should want to pull back. It can't get over, right? In between here now, we got on the 4 hour, we got some fair value. We also have an inverted hammer, right? Because we have an inverted hammer, we know that price wants to retrace the hammer. All right. Because price wants that retrace that hammer, then we automatically know we should be looking for things to the upside. But before we get crazy and go all the way through, we look for fair value. We have another fair value gap right here. I would expect 618, 619. Over 618, 619, then we can talk about trying to break over top of 626 and going further. Right? But until we do 618, there's no reason to even think about 626. All right? What do I want to look at? Anybody got questions so far about anything that I was talking about? If y'all got questions, just drop them in the chat or feel free to turn on the mic and ask a question real quick.
So I don't know if everything you just covered in the last half hour is like what you started with at the
What?
beginning.
More or less it's just random, not random, but yeah, basically it's some of the stuff, most of the stuff that I covered from the beginning. I was just really talking about like what kind of trader you want to be,
Mm-hmm.
um, getting your mindset together, your strategy together, the risk management together. You need to have those three things to understand how to really perform well as a trader. They all have to be kind of balanced, right? You gotta have a good mindset, and that mindset is basically removing your emotions from the trading floor. Um, you have to have a good strategy, and most people have that already. Most people have like some type of strategy that they learn because strategies are abundant. There's support and resistance. There's option strategies, the wheel. There's silver bullet. There's just a million different strategies and ways that you cut it up. So once you learn a strategy, the problem isn't learning the strategy. The problem is executing it properly, right? Um, Along with that strategy, you got to have a risk management plan. That plan on risk management has to be something that you could tolerate, right? It can't be I got a $5,000 account and I'm putting $3,000 on trades, right? That don't make no sense. You got a $5,000 account. You should be putting $200 on trades, 150, $500 tops on trades, but you shouldn't be trying to
Oh,
blow your account.
I thought you would have said at least 20%.
Nah, you're looking for 10% on that trade or less, right?
No, I'm saying I thought you would have said to trade 20% of the
That's what
5,000.
I'm telling
But
you. Nah, we want to trade 5%, 10% of that 5,000 because
mm,
you can make that money. You know what I mean? I know you're part of the Discord. Everybody in here isn't part of like the Discords and all that. And I mean, I'm streaming this on other platforms as well. When today, at the end of the day, everybody was trading the SPX plays and all that. SPX went uh, $150 to basically $2,000 by the end of the day, right? In 20 minutes. So you don't have to spend a whole bunch of money to make a lot of money. If you were to take $500 on that play, that's what one, two. That's like three of those plays that you could have bought for the 500, and that's what two four. That's $6,000 by the end of the day in 20 minutes. So you don't have to spend crazy amounts of money to start making crazy gains. All right. We talked about like candlestick patterns and other stuff like that as well. But let me keep going. So right here on the cues, like I said, we got the inverted candle, the inverted hammer. This wants to run back up the inverted hammer. Then we got the fair value. This is all on the 4 hour, right? That inverted hammer, this fair value, should be telling you aim for at least 50% of this fair value. So 618, take your profit at 618. After you take that profit at 618, then you can figure out what's next after that. We could go further into this, right? You could zoom in on all
is
these.
there a chance it could reject the fair value gap?
It shouldn't. It should
Mm,
always break into the fair value gap and then reject it,
okay.
right? It should always break into it. It should, even if it's like just barely by a wick, by the wick. You know what I mean? Anytime you break into the fair value and then close out of it, that's your entry. It's never while it's dancing around and playing on that same candle. Like the candle could come in here and it could hit this 50%, but the candle ain't closed yet, and it's coming down here, and it breaks out down here a little bit, but the candle's still open, and you push sell, and then all of a sudden, this candle just pushes back up, and it pushes through here, and then it closes up here, right? You just bought into a put that is gonna lose money because this is going higher, right? So you want to make your decisions, a lot of your decisions based off of closed candles when you're doing this. Right here, we might have a double bottom that formed, right? Again, you don't have to know every single pattern, but it's good to be informed. You might have a double bottom right there. So if this breaks into here, right? If it hits 618, what would I expect? I would expect if 618 holds, if 616 holds, that the double bottom worked out, right? Because a double bottom hits the neckline, right? We gotta come back to that neckline, and if it comes back to that neckline, then we know that it's a good trade, right? More than likely, it's gonna come right in here somewhere. That's gonna do my favorite part and make the flag. Then it's gonna take off, come down, and go back up. And it doesn't have to take off and come down right there, right? This could take off and go all the way up, then come all the way back down, right? So it could just do that. Well, just go straight like that, right? Where it comes up first and then drops down and finish that move. So those are all possibilities for what could possibly take place tomorrow, but we want to follow this by first, like I said, we're drawing these trend lines out to give ourselves a boundary, right? After you give yourself a boundary, then you want to look for any possible like chart patterns or anything that's going to pull it back. Remember, we was just on a higher time frame just now, bigger time frame on the SPY. We was pointing out something right here that kind of looked like a diamond pattern, right? So if this right here is like our diamond pattern, right? Let's just call this that. Then we know that price left from right here. So what's the very first stop that we know this wants to come to? If price is going to continue to the upside, this needs to tap into to 1496. Once it taps into 1496, it's either it breaks it or it rejects it. If it rejects it, this area is small, I would assume that everything is going down. If we don't reject it, then I would assume that this is the double bottom and that we're going to complete that move before we come down. All right. Now, earlier I was explaining that I came into this trading world through crypto. And why do you want to watch crypto, right? Why do you want to have to look at crypto to trade anything? And I always use like Bitcoin for the reference. And why would you want to look at this, right? Is because the market moves together. And this was my first line of training, and it's great for pattern recognition. Trading crypto is where you will see patterns left and right, and you will understand what's coming next. This is the same thing with watching the stock market. If the stock market stops at 4:30, and then 4 o'clock, and then you got to figure out what's next to come. You should be able to anticipate what's next to come, because you're starting with crypto. You don't have to trade it. You can paper trade it. Paper trade crypto and find patterns, right? Pattern trading is in my opinion one of the best ways to trade. It's very accurate. It's very accurate, especially when you know how to measure things properly, right? Here on Bitcoin, let's go to a higher time frame real quick. You got a head and shoulders, right? Then we had another head and shoulders inside of that right shoulder. All right. Even right here. This is earlier I talked about the Elliott wave with when we were looking at LLY. Right? But the market is repetitive. Right? This is in my eyes, this is the Elliott wave. Right? When a pattern repeats itself multiple times. Then you have the wave version of it, where the pattern is repeating itself just through waves, and I'll show you that in a second. But right here, you see we had a head and shoulders. Basically failed because it didn't break down to the size of the head, right? Let's break this down and show how these targets more or less kind of work. So we got a head and shoulders right here, right? I'm gonna zoom this up. Slide this one over. So we got a head and shoulders here, right? Now this might be a little bit off, but its offness might be in like a wick or something. So kind of bear with me with that. So yeah, the off might be off of a wick or something. Let me see something real quick. Would they count that for it as the breakdown? Let me see something. Alright. Nah, because that still is a little bit larger. Hold on. Wait up. Right. Alright. So, this right shoulder right here, right? This right shoulder would be this right here. Right? And you see how this is kind of, it breaks down and it lands in this box? This is where you take your profit. This is where you get out of the play. That's it. You end the play here, you get out of the play there. After that, if you're in it, you're going to lose your money, because you're going to expect this to keep going down. And what you want to see is, in the head and shoulders, you want to see price break down. You want to see price go retest the neckline. If it breaks over the neckline, we know that that retest is over with and that it's not going down. If broke over the neckline. Boom. You got a flag there. Had a breakout. Never came back and retested this flag, or did it? It did. It had a breakout and a retest right there. Right? Because it had a breakout and a retest, there's no reason that anything wants to come back down there. Right? Always remember that. Breakout and retest, no reason to come back just yet. Right? It can come back at some point, but a breakout and a retest is basically telling you that the market is done with that section for a second. We had that breakout and retest, then we had started this running up. Right? Got all the way up top here. Then we end up with another head and shoulders or diamond pattern up there, however you want to look at it. Then we had a big dump in the market. Right? Pull back pretty crazy. Right? Let me close that line off. So then, you don't need this anymore. That was just to measure to the bottom of that box where we was going to bounce at. Then we got this dropping down here. Right? We had the big move down. It breaks the neckline. Why does it break the neckline? It breaks the neckline to show weakness to the downside. Right? So now we get some other type of move and then back up. Back up, a bounce back up, then back down. What happened for the move back down? The quicker you could spot it, the quicker nobody got to explain it. Another head and shoulders. Right? So this just keeps happening over and over again. Right? Let's take the measurement of the head and shoulders. Just the head measurement. Ain't this roughly the bottom of that move? The market tells you exactly what's going to happen before it happens. Ain't no news needed. Ain't no nothing needed. It tells you what's going to happen right before it happens. So then that happens. Then we run back up, right? Because every time it's done, what did I say the last time? It wants to run back to retest the neckline. Right? Boom. It retests the neckline. Then what happens? It bounces up through the neckline. So now we're understanding. What are we understanding? We're understanding weakness. We're understanding weakness. So even though that it came backwards, it showed that it had weakness, that it was going to go back over the line, right? So that weakness led to the next head over there, right? Led to the next head out of the head and shoulders. Keep moving these joints, right? Then that came down, this came here, boom, and now we got another move, right? Now before we discuss the other move, let's discuss the bigger move, right? The full picture. So you see how many head and shoulders we end up putting in here? It's just repetitive. It just kept doing it over and over again. But you got the bigger one right here. This is like when you see those pictures of the square, and they be like, how many squares do you see in here? Right? It might have like 18 squares or something like that, because there's the one square, then there's the square inside the square, And then when you take all of those squares, that's one big square. So you're just adding up all the squares. It's the same thing. This is so many different Head and Shoulders to make this big Head and Shoulders. Right? So now we got the big Head and Shoulders. Let's take some measurements out of this. That's my right shoulder. And that's my first move down. Right? What is this on? Give me 1 second. I don't think that's the right thing. Guess it is the right thing. Let's check it out from the daily or the 24. Okay. This filled out the whole from the head down, right? This filled out from the head down. Right? So we got the Head and Shoulders, then it breaks down right there. This was the whole Head and Shoulders down, right? This whole 3 points, this was the measurement down. Then this is the right shoulder to the big picture, the big problem, right? That measured right to the bottom of that neckline, right? Next thing that's going to happen is we might get, like I said, we'll get a little pop soon. We might even come all the way back up here, right? This looks like it's building the flag. Bitcoin is good for this. Let me change the color of this real quick. Bitcoin is good for doing stuff like this. Having a consolidation up just like this. It's a bear flag, right? But this bar right here will probably come all the way back up here, or halfway up there, right? Then it's going to turn, and then the next bar, it's going to come down. So what's today? Thursday. So Friday might be the day that this starts breaking down. Bitcoin got to get to like roughly $83,000, right? We're not just talking about like where certain things got to go, but we're talking about measurements and everything else. This right side right here, because your right side is usually your breakout. So that's roughly the size of the right side. The right shoulder. The right shoulder. And then you put it on here, and you see this lands right on top of this 86K. This is the liquidity in here, right? We need to get inside of here. So this is just the right shoulder that brings us to here. That's the first move down. So what I think is going to happen is once price breaks into this and it's dropping, you'll get the move all the way down. Then you're going to get the move all the way back up, right? So this is tapping into that, but it doesn't have to necessarily bounce here then go up. This can finish this move all the way down, and then this move bounces back up. Bitcoin is good for making $20,000 drops and recovering within a couple of days. Here's one of the last drops that it had. Now we didn't recover yet, but for the most part, I'm just kind of show how Bitcoin would operate. This is one day. This is like over $20,000, right? That's so. Just say that. Let's say this right here, these bars right here, the wicks on these, is the bottom of the breakout where it has to leave from. Well, when you look right here, the size of this candle, not it's a coincidence that it's the same distance, right? But what's even different, what's even more interesting, or whatever I'm trying to show you, is that this is one candle's worth of Bitcoin dropping. This is nothing. This can reverse in one single day. That's why there's a lot of people that are like, oh, Bitcoin could probably hit 150, 160, whatever by the end of the year. It's very possible. If Bitcoin drops down here, then this is a huge rally that the market just goes off on. Right? So that's all possible. But this is how you take those measurements. The right shoulder is a measurement. The head is a measurement. I like to think that this left shoulder is a measurement as well. This is stuff that you won't find online, things that they won't probably teach you, right? Left shoulder is a measurement, right? You take that, put it on top of there. That's the size of the head, right? That's the top of the head right there. So the left shoulder will tell you how much move to the head in most cases. The head will tell you the entire move after it breaks the neckline. The right shoulder will tell you the first move out of the right shoulder. Right? That's going to be your very first move where things might bounce and start to go in different directions. Alright? We can do it here. Look at LLY. So LLY, right? This is not showing the ticker. I'm showing more of what we were looking at, and this is the LE wave. So I'm going to change the color of this because I don't feel like going through this to change the information that's on there already to see it. But these charts are the charts that I normally use to trade with, gray charts. So this right here was what they consider to call the Elliott wave, right? The Elliott wave, you have the initial phase and the run up. Then you have the second movement. Then it runs up. Then you have the third one with a kind of like a fake correction, and then it runs up. Then you have 4. 4 always comes back to retest 3. It came back and retested 3. 5 is when it's all over. 5, it rotates over. Then you have the end of it, which is ABC. You have A is the first initial dip. Then you have B, which is a fake out. Then you have C, which is the real drop. And then this right here possibly is going to start the wave over, right? But that's how you go through the Elliott wave. Now the Elliott wave is something way more advanced, I think. And really you should want to stick to like the things that are more easier than that. So again, I love trading patterns. I'm trading a head and shoulders, an inverted head and shoulders, a cup and handle, a round and bottom, a round and top. A wedge, a flag, a pendant. And all of these have destinations to them, and all of them have what's the word I was looking for? They have specific positioning, right? Some of them are continuation patterns, and others are reversals. Let's talk about a few of those real quick. So got your cup. You got rounding tops. All right. So a cup and handle is a continuation. A cup and handle is a continuation. Right? These are all continuation plays. How a cup and handle works is price runs up, drops into the cup and handle, gets ready to leave the cup, drops into the handle, breaks out. That's a cup and handle. That's a continuation. Then you have a rounding bottom. A rounding bottom is a reversal. Price isn't coming up into a rounding bottom. Price is coming from above a rounding bottom. It goes parabolic. It either shoots straight up or it shoots up, come back to retest that neckline on this, on the cup, or on the rounding bottom, and it runs up again. Inverted cup and handle. This is a continuation. Price will be coming from above. Comes down, goes into the handle, drops out. Right? This is a continuation. A rounding top. This is a reversal. This says that price is running up into here, sees a good opportunity to reverse. You have continuations. These are continuations. These two are reversals. Know the difference, know where they're positioned at to know that if it's going to work or not. If you see a rounding bottom at the top of a chart and you don't see a handle being made, that's going to fail. If you see a cup and handle all the way at the bottom of a chart, that's probably going to fail. Understand continuation, understand reversal. You have other reversal patterns, other continuation patterns. We just watched one today, and again, this isn't always the truth, but it's the truth 9 times out of 10. So then you got the diamond pattern, right? Now, I always just use these ellipticals to draw it so I don't have to go crazy with the lines or nothing. But just imagine this is a diamond pattern. You got all 4 sides looking like a diamond, right? A diamond bottom is a reversal. That's price coming down like this. Right, it comes into the diamond, then it breaks back out to where it came from, with where this dropped in at from the most, right to there. That's how you read the diamond bottom. The diamond comes into the bottom, in from the top, consolidates at the bottom, and then breaks out. LLY. To the upside now would be a diamond top. You got it going up here. You get a consolidation within here. And then price is going to want to come back to where it came from. Once it does that, then it's going to want to shoot back up and retest where it broke out from or broke down from. Right? So that's diamond tops and diamond bottoms. Those are reversals, not continuations. Then you got like bull flags. Bull flags are continuations. Bear flags are continuations. Right? Where can we see any of this other stuff at? Oh, perfect example right here. We'll use the VIX. Right? VIX. Looks like it's building a inverse head and shoulders. Overall, the VIX looks like it was coming out of a cup and handle. Right? A lot of people won't chart the VIX because they don't think that it's chartable. It's very chartable. It might not hold every day, but it's very chartable. Right here, I say VIX breaks down tomorrow all the way back down to 1780. Here is a perfect example of taking profit when a move is complete. This box right here is this party right here, right? Before it even broke down, we tried right here. This worked out. It came to right here. Once this hit right here on this box, there was no reason to be in any plays on the VIX, right? But then your mind starts seeing things, and then you like, oh, I'm gonna stay in longer, or I'm gonna do it this way, and you just end up getting the bad end of the stick. So I had some SPX puts at the end of the day. They went 200 to 225%, but overall they went like haywire, right? Them joints went again to 1900. I think I made like a little bit over $200 on my puts, where this showed you what was going to happen in like the SPX. So when the VIX is going down, more than likely the market is trying to push up. When the VIX is going up, the market is more than likely trying to push down. This right here was the first stop to the downside. After this, there should be no more play. You get out the play, and then it's going up. But when I saw this, and that's why I say the market will try to kind of trick you, right? Yeah, I saw this like this, which could show you that, all right, this is building to move up, right? And again, it's all about checking out the like the wicks and everything. Did certain things happen in the sequence, right? If I take this right here and I draw this line, right? If this was the highest point in all of these candles, you got one break, you got two breaks. This is telling you that there's weakness to the upside, right? The end of this move right here was telling you that a reversal was coming back to, so I look at this like up here as a diamond pattern, but it could be a head and shoulders, right? And that's how I was looking at it. So if it was a head and shoulders or whatever diagram, we know that we had to come back there. At least to that point was 1968. Right? So because we should have came back to that point, when this broke out even further, then you should have been in it that whole time. All right. This looks like it wants to come down and just continue to fill this. The first stop on this though is going to be right here. Right? This is where it broke out from. If we can continue to get this to go down, that would be a blessing, because the following day this breaks out again, right? So now tomorrow we're gonna have some downside And I don't know how long this downside takes, right? Tomorrow this could drop the hair to 19, then do something and fill the box out to 18, then it can have some consolidation, then it can drop late in the day to 18 or whatever it is, and then the market reverses. So this doesn't have to just happen straight. It could be like a drawn out situation, right? But after this happens, when the VIX shoots, the VIX is looking for 21. It's looking for 25. Anytime the VIX hits 21 to 25 and you're in calls, you're going to get burnt. You want to be in as many puts as possible for that play so that you can maximize your profits, or maximize your portfolio, I should say. But we're still talking within the averages of what you should be spending on your portfolio. Now, let me show y'all something with this real quick. Let me show you something like this real quick. It is basically it's like an allocation thing with, all right, here we go, right here. So it's basically like according to like whatever the VIX price is, it here it is. Tells you how much you should be risking on your portfolio. So if the VIX is at 0 to $15, then 25% of your portfolio is all you want to risk. If it's at $15 to $20, 30% of your portfolio is all you want to risk. $20 to $30, 35%, 30 to 40%, over $40, then 50% of the portfolio is fine to use. We know that if the higher that these is running, this is just telling you that it's only going in one direction for the most part. So if it's going down, you can put more of your portfolio in because there's no reason for it to go up. All right, get this off the screen. So this is what we're looking for to happen, though. Like I said, double bottom here, inverse head and shoulders. There's a gap to fill right here. So hopefully that's the bottom of it all, and then this kind of shoots back up, and we get to see what's next. So next would be an inverse head and shoulders. It would be this breakout here, and it takes you up here. All right. And then we got this whole move right here. This is the rounded bottom, or the cup. This is that measurement right here. So $25 is on the way for the VIX, and that would say that we should get another crazy pull in the market sooner than later. All right. See, we got like the orbs or anything else. Anybody got questions though before I go on any further? All right. what didn't we go over? We got break of structure that we could talk about. Um, all right, so I'll give y'all a couple tools that y'all can use to do like break of structure and all that other stuff that you don't have to know it yourself. But the object of this is not to just use like indicators and things like that to give you all the answers. That don't make no sense. You should understand what you're looking at and what you're doing before you really slap indicators on, right? The best traders don't use indicators. It's just a chart and whatever knowledge they got, right? Because we all know that indicators are biased, right? And the indicator is going to basically tell you what you want to hear and what you want to see on that chart. It's going to make you miss something because you don't understand the mechanics behind the chart. You're just depending on an indicator or a signal or something like that, and it just doesn't work out. What I was looking at just now. Oh, I was going to show y'all the indicator. Let me pick another chart. Show y'all on that. So back to Tesla, right? Go to, well, it should be on my list right quick. So this is what you want to get. You want to get this indicator. It's called super order block. So write that down. Super order block. Fair value gap. So just super order block FVG. And it's by BOS Tools. Or no, it says BOS Tools. So that's breaker structure. It's by Makuchuku. Whatever the heck his name is. Makuchaku. Right? Just when you see that name, that's what you want. But you want the super order block, right? This is basically going to map out all the fair value gaps for you, all the order blocks for you. And as you start learning from seeing it, where all these things are, that should be like you learning more and more about what's going on in the market. Right? You got to retain this information to understand how to trade. Right? If you don't retain it, you're going to be looking for it, and you can't look for it while the market is moving. It's a little bit at a time. You don't have to know everything all at one in one sitting, in one set. It's just a little bit at a time. 20 minutes a day, 30 minutes a day. Right? You don't have to have it all, though. So, where's I going to look for real quick? I got to turn the eye on so y'all can see it. This is the order block thing right here, right? So you see this order blocks all over. I think this is my supply and demand thing, so that's not it. But you see order blocks all over the place. These green boxes, those are order blocks. Then these gray boxes that you're seeing, these are what do you call these? Fair value gaps. These are fair value gaps. So you see red order blocks, those are bearish order blocks. Green ones are bullish order blocks. Notice how price just came here, boom, it jumped up, can't go no higher. Why? Because it had to hit the order block first. Tapped into the order block, it just went off, right? It broke out, and then it keeps going. Now, what happened here, right? What can't you have in an uptrend? A rounding bottom. This had a rounding bottom. That's why it failed this morning and just kept dropping. Right? So you can use that indicator to kind of help you map everything out, uh, and it'll show you like some of the fair value gaps. And if you're on different time frames, you'll see it from different perspectives and all of that, right? But sometimes it's not going to mark these out. Sometimes you got to find it yourself. But you see, there's fair value there, right? This was the fair value right there to there, and then it had like a crazy run into that fair value into the order block, right? After it hit the order block, it pulls back a little bit, and it kept going, right? And now this is what I would think was the right shoulder on Tesla, right? And then you see how by the end of the day it all came back. Now, if I take these wicks off real quick, and probably like in the next 10 minutes y'all got questions or anything, y'all could answer them. I mean, y'all can ask them and I'll answer whatever I can. But if I took the wicks off real quick, right? And let's hide the indicators for a second to clear this up. Take the wicks off, clear out the indicators. What do you see happening? This right here is like a shelf, right? Where price basically was like, didn't go higher yet, but it's a shelf, right? If I take this right here, you see what happened here? Where price, let's just look at this as a market structure, right? Remember, we always talk about market structures. Market structures could be on any time frame, but this broke that market. This is the candle that broke this structure, right? Breakout and retest, you want to see that in every aspect, whether it's a breakout and retest from a chart pattern or a bar combination, or is it a breakout and retest from what do you call a breaker structure, right? Everything has to break out and retest. There you got the breakout, but nothing ever retested it. This just came around and did it. The only thing more is that you had to deal with the wicks. That's part of that equation. But you take the wicks off, you see exactly what happened. This is a cup and handle. It broke out. It retested the area where it came from and broke out, and then it went higher. Now let's take another line and draw another line in there and see something. All right. So if you had something like this, you would see that this is where we broke out from, right? No retest, that's your retest. All right. My erase button, back button. So that's how you put it together for that, right? The wicks matter, but they don't really matter in all cases. And at some point, you got to kind of figure out which tickers the wicks really matter for and which tickers that the wicks don't matter for. All right. I would say more like QQQ things don't really use wicks as much. Yeah, the QQQ don't use wicks as much as the SPY does. All right. So again, we had this rounding rounded top that failed because this is supposedly supposed to go parabolic, but it didn't. Came back, it retested the original breakout, right? Where's it gonna go from here? Well, we had the original breakout, we got the bounce on it, plus it's breaking out of this handle. I could only imagine that it wants to do 50% of this and then do the rest of it to 83. So 50% of it looks like it's around 470, and then 483 into Friday, possibly. Right? But again, we're not trying to time it, we're trying to play with time. So if it's 2 weeks that you got to get on something like this and pay a little more for it just to not have to deal with theta, that's the best option. All right. But we got this handle here, and the handle is breaking out. So that's how I would look at those right there. Breaking structure, real quick. If we're just looking, matter of fact, let me put these wicks back on real quick, and then come on, what's up with this? All right, put the wicks back on real quick, and then, like I said, we'll make a little room for questions real quick. But come down here, back in time. Where's my chart at? All right. Where did we start? Okay, so right here for the year, right? So you got a bunch of stuff that went on for Tesla throughout this whole time, up until where it's at right now. Right. This is the second one. I'm looking for the first one that happened. All right, it's this right here. All right. So at the beginning of the year, or early in the year, we had like a bunch of consolidation, and then things breaking out from Apple to Tesla to Google, Home Depot. Everything was just kind of like on a tear earlier on in the year, right? How you follow this, again, without like the news and all that other stuff, everything's always on the chart. So we got cup right here, right? Then you got your handle right here. So you had a cup and handle on Tesla, right? Also in that cup and handle, you had a double bottom. You had a huge double bottom. Wrong tool. Right. So this is how the first movement took place in Tesla, right? To up there. That's how the first movement took place. Once this started breaking down, right? This wick right here, and remember what I say when I'm like, if it's strong enough, it won't cross it, right? This wick stopped short of going down here to in this Tesla play because this was the neckline, right? It tested the neckline, it tested the flag breakout on this, and then it goes up. It has no reason to come back down there. All right. Then you have all of this consolidation. Then you got the handle breakout. All right. Let's take a measurement of the handle breakout real quick. Trying to see where this is wrong at. So it's not wrong. All right. Because you would really do it like that, right? So you got cup and handle, boom, handle takes off, breaks out, takes us to the top right here where we're at right now, right? This is how you measure the market. This was a long time coming, but that's how you measure certain things in the market. So that was the cup and handle, right? Then you got the whole cup. That's another measurement. And we could take that measurement and put it on top and see where that's going to go. That measurement is going to be longer term than the handle, right? So this is our cup, the size for the cup. Then this is our target. 520 in time should be your target on Tesla, especially if you caught it from down here, right? And it was simple to catch it from down here. Don't let nobody fool you like, oh, you couldn't have known that was going to happen. There's the proof that it was going to happen. Now we could go down on a lower time frame and see people that that didn't think it was going to happen. And I apologize if I just lost my train of thought while I was trying to figure this out. But this is the next move, right, to 520, right? What could be happening right here on Tesla is that we don't really have to back down no more, right? This could be the top of the move. So here's another move right here, right? This was the top of that move. Tesla could be just coming back down to retest this 400 area, right? Because it never did yet. It could just retest that 400 area and bounce back up. All right. It could not have to do any of that, and could also be making this wedge going up, where it's filling this wedge out, and then this breaks out again to the upside. So, like I said, everything is always right here for you. It's whether you can see it or not to be able to capitalize off of it and continue to play. Right here, looks like you got a Harami pattern, right? Takes off, it fulfills that pattern. Also had a flag in here. Then we got the bunch of consolidation, then it goes up. Right here, I remember this day perfectly because I was mad that I got out of Tesla and 2 days later it took off like crazy. This right here, pinned into this. And it was a inverted hammer. You know that price wants to run that up, right? After price runs that up, we know that the next bar wants to go down first. It's the sequence all the time. It never changes. Then it just started taking off, and I wasn't a part of it. And I don't like to chase. I think I was up to here, like this bar right here. Somewhere in here is where I got out. And then it did it again. Then right there, You had the flag. Boom, that breaks out. Once the flag broke out and it got over top of the 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 handle on the cup and handle, then this is where Tesla started getting busy. All right. So I know I went through like a couple different things, like randomly, and next time I do it, I have a little bit more organization to it. But for the most part, it was just kind of pointing out different things that can help you as a trader, especially with like measuring out um, bar combinations and chart patterns. The market tells you every time where everything is going. Every single time it tells you where the market is going. All you have to do is know when to take that profit when it shows you that, and how long to play for. As far as playing with time, I always try to say double the time frame that you're looking at. So if you're looking at like an hourly chart, you want to play with, you know that the play should be over in like the day, 2 to 4 hours. You're looking at a daily chart, you want to get a week to 2 weeks out. All right. You want to, another good thing to do is to I was gonna say had to do with like buying time. Oh, I like 45 days out and rolling everything within 20 days. So being in a play that's or in an option that's 45 days out, that gives you enough time to be green on it within 20 days. And then take that and roll it into another contract that's further out. That way, if the play still has room, you don't have to worry about theta kicking in and tearing that contract up. All right. So stick around, and you'll see a couple more of these lives go out. If anybody's interested in like any type of like mentorships or anything like that, you know how to reach me. If anybody got any questions, I'm here for like another 5 minutes. So feel free to ask away. There are macro algos at the beginning and the end of the day. Macro algos are when the market just is like spiking around. So at the beginning of the day, the market usually runs up or it runs down, and that's usually a quick scalp, right? That you can make decent money on. Sometimes even like just playing the swing. I don't know if you ever seen like a trade. You might have took a trade and in the morning time it's like up 300, 400%, but you try to go close it, and by the time you get to pushing the button, it's probably only up 75%, right? Those plays right there, you need to learn automation to be able to get out with that money that, is during that algo first thing in the morning, because it'll shoot up and you'll try to push like a market sale, and all your hard work is gone, because you're not going to get the 300-400% that popped up by the time you go through the motions and push it you're probably only gonna get 30-40% out of a bigger move. So understand that with like the algorithms and all, like macro algos and all that. So you got different windows that you can make those trades in, and they end up being like real fast trades on like SPX and NDX and RTY. You know what I'm saying? But yeah, you could just dive deeper into it. Whatever I've been talking about all night, just dive deeper into it. You can use ChatGPT to help you dive into some of these things, right? Yeah, and that's about it. Like, trading doesn't have to be complicated. It's simple. We complicate it. Everybody wants to sound like the smartest person in the world, and we don't have to talk about the market in like the smartest form. All we got to do is know what it's doing. We know that it breaks here, bounces here, then the next move should be here. And if we could keep that process together without cluttering ourselves with the noise, you're gonna make crazy money. I promise you're gonna make crazy money. It's too repetitive what happens in the market for you not to make money. The people who make money are the people who are like really focused and trying, and they disciplined and everything else. The people who don't make money and just keep putting money into it, they don't have no rules, right? They just doing whatever they want, and they need to stop trading. But that's about it. We will get back at this tomorrow with the live trading. And if you got any questions, again, feel free to hit me up through any of these chats, and I'll try to answer the questions as best as possible. So for now, everybody have a good night. Appreciate y'all all being here on all the platforms, and we'll do this again to my Discord. I will drop the link to this as soon as it is I guess compiled or whatever, sent back to me from Google. And yeah, we'll go from there. But tomorrow we're gonna be back at it doing the same thing. Alright? So I talk to everybody. Again, thanks for being here. Like, subscribe, join these TikToks. Follow the page. You'll get the alerts for whenever I do these lives. Alright? Cool. Peace out.